Update here on Sunday the 11th. I added something to the chart that I think is very important. Something that I started using recently when I learned how to use it. It is supply and demand. I don't use it like on lower time frames, but for like daily time frames, it seems pretty important. So on the daily time frame, you look at this, you can see that we took off right here. And so you basically draw your daily demand, the candle before it. So that is 373.84 all the way to 381.16. And so I was just looking at the fib levels of everything. And in the last video, I talked about potentially this being W. Let's see, I did W right here. So basically A, B, C, and this being the X wave down here, and then getting a Y wave up here. If you look at, if this is an expanded flat, so we have A, B, C down here, you can see also that the 1.61 fib would be at right in the daily demand level of 378. And also, if you're looking at this as ABC as well, then you'll see that the 1.61 fib is also in the daily demand. So both of those, if it is WXY and this is an expanded flat X wave, go right into the daily demand. So that means that you want to sell when it hits this box, you want to go long, basically. And of course, if it breaks through this, your stop loss is below 373.92. So the bottom of this candle is your stop loss, because that means that it's broken through demand, it's going to go to the next demand level, basically. That's the way it works. So if you're looking at it like that, this would make a lot of sense. And then obviously we would go to somewhere in between the 1.23 probably to the 1.61 fib. 1.23 is at 415. 1.61 is at 436. And then if you zoom out, that would make the whole entire move A, B, C for the B wave. And that's the move that I was talking about would absolutely screw the bears. This would basically be a bear trap. And then you'd have bears, super bearish at that point, and then we get a huge bounce and start the Y wave. And the Y wave would be pretty explosive, and it would probably be pretty quick too. Maybe take a month and a half, 2 months, something like that. And then in February, we would start the move down. So it would just be straight down after that. This would allow people to reload their shorts at really high levels. If you notice that every move down, there was a huge bounce. We came all the way almost to the top for this one, and then this one came all the way to 430. So the question is, do they want to have it only come to 410 and reload right here, or come up here to 430 and basically destroy all the puts? So that's the first move. And then obviously the one 5-wave move that I've had highlighted for a long time. The thing about the 5-wave move though is, again, we have the daily demand down here, and we have this right here is key. 390, I think it's 25. If we break that, it's going to be like a suction cup straight down to here. So I think that it's really going to be key to hold this 390.25, even if they want to be bullish like short term. If we break it on a 5-wave move, it could potentially do that too. Then we're looking at it like this. We would still bounce back up here to like 394, 398, something like that. It's just that we know that if it breaks this, it's probably going to go down to 381, 373. So that's something to be aware of. Before I had like 385, 387, but that doesn't make as much sense when you have the demand down here. So it'd probably be a pretty big 5th wave. That would be 397, 16 points at least, when this 3rd wave was about 16 points as well. So it'd be a short 1st wave and then 2 long 3rd and 5th waves. So that's something to keep in mind. Daily demand is down here. If we zoom out here on the weekly time frame, we can see that we basically hit, on this move, we hit the supply on the weekly. So weekly supply is right here. So it'll have a hard time getting over this box if it goes higher, which is 411 to 431. So maybe it just comes up here. If it does WXY, maybe it just comes up here to the 1.23 fib at 415 as well, like I've been talking about past videos as well. And then if we go even lower than that, for the crash, we can also look at the supply zone on that, and that's going to be right here, 323 to like 351, which we hit before. It's going to be hard to, it won't necessarily be hard, but it'll be harder to get to this. Anywhere between 345 and 320, probably going to bottom somewhere in there, maybe a little bit lower. Monthly demand is right down here. Where did I get that from? I'm sorry, monthly demand is down here. I don't know why I have this highlighted here. So monthly demand right in there. So we'll see what happens. You can see monthly demand because all these green bars, the last red bar before it took off, is right in there. So it went up and then it never came back down. It just started going higher. This is the last bar before that. So you measure like that. So 295 all the way down to 246. So that's monthly demand, but we have daily demand for the next one here at 381 to 373. So I would look out for that. If it breaks 390.25, you're looking for coming all the way down to here. So watch out. We'll see if it's a 5-wave move or if we get ABC. Should be able to tell tomorrow, I think, by the end of the day. And then I'm personally going to be hedging both ways. No matter what, I don't care if it comes down to here tomorrow. I'm not going to be super bullish still. I'm going to still have hedges both ways. So that's pretty much all I wanted to say. Let's look at the dollar. Actually, we can look at the demand on the dollar now. I'll just do those two in this video, and then we'll leave it at that. Dollar demand is, for the dollar, I'll just use the weekly chart. We'll do weekly demand. Weekly demand is right here is one demand zone. So we got 106.82 to 104.64. It's actually broken that, which means that we hit this demand zone right here as well as another demand zone. We got red candle before a big move. But I want to go to monthly actually. Monthly is probably the easiest. And no, it's not the easiest. We'd have to come down here to 90. Let's just do the next demand zone. If it were to fall through, it's at 104.93. So it's actually above this demand zone. It's in a demand zone right now. But the next one after that, if it were to fall, is going to be let's see, 101.46 to 102.94. But we're currently in this demand zone right now. So it's more likely that it's going to bounce, that it's going to go down lower. So we can draw one right here as well. And then we can look at the supply zone after that. Supply is up here at 111.73 to 113.90. So that would be the next logical place on the weekly time frame for it to go before when it finally starts going in an uptrend. So obviously we're still waiting for this to end. And look, they could come down here and hit this demand zone right here. But I would say it's pretty much finished, and it should get a move higher than the demand zone, actually the current demand zone at 111 to 113.89. If we zoom out here even farther, there's probably a demand zone, or supply zone, I'm sorry. Going back, we have that supply zone up here at basically around in here, 118 to 117, around in this area. So he'll have a hard time breaking the top here, but my target is 120. So here's a supply zone right here. Around 120, 119. So you can see how this works. But on SPY, just keep an eye on the daily demand. That's a clear, easy one to find out. So if we break 390.25, look for a fall down to that area. That's pretty much it. Just wanted to go over that. Keep you aware. 390.25 key level, and then daily demand is key level as well. So that's it. Let's see what happens tomorrow. I'll make some videos tomorrow and be ready to hedge both ways. You could make a lot of money if we get the right direction, but you also got to be ready for the opposite direction too, because you can also lose all that money. So you gotta be ready for anything. Don't go all in on one way. All right, I'll see you guys tomorrow.